Lululemon just reported amazing earnings and surprised the market, having one of its most massive jumps in history. I believe Lululemon is currently up, and the market is open, is currently up 16%, and it is massively overbought. So, ladies and gentlemen, welcome to Wealth Down. We're going to do a little breakdown of Lululemon. Full disclosure, we do own the stock, and I'm not going to reveal my intentions what I'm going to do with Lululemon. You may have to tune in for the weekend episode where we reveal our positions, what I bought, what I sold, and why I did it. So let's just get into Lululemon's report. They report a really strong revenue growth of over 9% increase in the net revenue to 2.4 billion, fueled by a 33% surge in international sales. And that's obviously why the market was so happy with them. They also reported improved profitability. The gross margin expanded by 150 basis points to 58.5%, driven by pricing power and, of course, operating efficiency. The operating margin surged by 20.5%, reflecting a strong execution and cost control. Also, solid comparable sales growth, which increased by 4%, demonstrating a brand's enduring popularity and the ability to attract customers. I myself have two wonderful women in my household, and you know what? They love Lululemon. Now, they guided for Q4 2024 to upbeat guidance for the fourth quarter, anticipating an 8% to 10% revenue growth and a EPS in the range of $5.56 to $5.64 per share. That will definitely be amazing if Lululemon reaches that EPS. So currently they're up 16%, but from yesterday, for when they reported earnings after the bell, they're up 23.95% for the entire week. So they started down here, but we must take into consideration Lululemon had really a bad year. Actually, if you take a look at the year report, year to date they're down 21%, so minus 21%, and for the year they're down minus 13%. Now, if you held Lululemon for 5 years, you're up 75%, which would not even beat a S&P, which is up 94%. So you still be lagging the market. But the year is not over, so let's see where Lululemon lands. Also, let's continue a bit with diving into their revenue performance. Overall revenue, 9% year-over-year increase in the net revenue is massively impressive, actually, especially considering the challenging macroeconomy environment. Now, they're actually on a strong buy here in the technicals. Also, their forecasts, if you take a look here, are, well, so I usually take into consideration the average forecast, which is minus 9. But if I also take into the minus 51% for the next year, then I would say, ooh, that doesn't look pretty good. Now, let's continue on with international growth, which is significant, 33% growth in the international sales, highlighting that the brand's global appeal and expansion strategy was pretty good. Take a short look at finances that sadly do not yield a dividend. It would be so interesting. It would just yield a small dividend. So the company is mostly selling over its e-commerce business and then company operated stores. So they do not sell over, mostly don't sell over other stores. Only 9.33% of their sales happen over other stores. The rest happens over company operated stores. So company operated, not owned necessarily, which in that case would be quite a different story. Now, most of the sales, as you can see here, happened in the United States with 65.98% of their sales taking place in the United States. And of course, the nearest neighbor was Canada with 13.36% and China again with 10.0.2%. So a interesting story here. China did not influence Lululemon that much. Also, let's take a look at the rest of the world and Hong Kong and Taiwan. So Europe is not even mentioned here. It's maybe there in the rest of the world. So most of their sales is happening in the United States. Now, also comparable sales, a 4% increase in comparable sales, indicating a strong demand in customer loyalty. Let's just take a look at the profitability. In the Q4 outlook, the company's guidance. So for profitability, gross margin expansions was 150 basis points, increasing a strong margin, increases a gross margin in its statement to Lululemon pricing power and efficiency operating. So operating margin improvement by 520 basis points, increases in operating margin, reflecting strong cost control and operational leverage. So once again, Lululemon is that strong brand that we used to love. So the guidance for the fourth quarter, the company's guidance for the fourth quarter is really encouraging, suggesting continued momentum in the holiday season. But let's not forget about risk. So if we talk about potential risk and opportunities, we're going to talk about roughly 6 points here. First will be economic uncertainty. A potential economy downturn could impact consumer spending on discretionary items like athletic apparels. The next point will be the supply chain distribution. Ongoing supply chain challenges could affect product availability and cost, and then also increase competition, growing competition from other athletic apparel brands that could erode market shares. And of course, international expansion, successful expansion into new markets, particularly in Asia, presents significant growth opportunities. And two more would be product innovation. Continued innovation in product design and technology can drive sales and consumer loyalties. And let's not forget about digital transformation, which investing in digital channels and e-commerce can enhance customer experiences and drive online sales. Now, furthermore, could there be any innovation opportunities? Lululemon's Q3 2024 results demonstrate that the company's strong brand positioning, operational excellence, and the ability to navigate challenging market conditions show the brand's strength. The positive guidance for Q4 2024 further reinforces the company's growth perspective. Now, investors like you and I should consider, first of all, valuations, which means assess Lululemon's valuations relative to its historical multiples and peer groups, for example, Nike, the long-term growth potential, which means evaluate the company's long-term growth prospects, including international expansion and product innovation, and the risk tolerance, as always, your own risk tolerance. Consider the potential of risk associated with the economy's uncertainties, supply chain distributions, and supply chain disruptions, and increase competition. So let's do a little bit of risk assessment here. So the current state of Lululemon, I would just say that in a RSI is currently at 81, which is above 70 massively. So I would say that the risk right here is very high. Our MACD is in a strong buy signal, so MACD strong buy, which also means for me a very high risk for the current price. Even though the outlook for the next earning is, well, just pretty good, actually exceptional, I still think that this is currently a high risk opportunity for me to further invest in Lululemon. Now, by all means, if Lululemon has a significant pullback, it could be a buying opportunity. But I will leave it to you, and also leave your comments in the comment section below, and we're going to discuss this furthermore in detail in our weekend edition, of course, and then you will also know what I did with my Lululemon position, which is just massive. So, hope you enjoyed it. Like and subscribe. Catch you next time. I'm Norbert PM, wishing you a lovely day. Stay safe out there. Bye-bye, bye-bye.